House hunters are back on the prowl in Australia's biggest cities with frenzied bidding at some auctions, pushing prices way over reserves. Bidders have been lured by low interest rates and the promise of more cuts from the RBA. Prices in Sydney and Melbourne are on the rise again, but with household debt at an historic high and the banking regulator may be forced to clamp down on borrowers yet again. Finance correspondent Philip Lasker has the story.
At $980,000, what a delightful home it is.
Is the big city property boom making a comeback?
Million a bid, I bid $1 million now, had $1 million, 10, million and 10, buy it.
The price didn't square with what Jake and Catherine had in mind.
Yeah, way more.
A lot more. We were sort of hoping around the 950 mark and it just blew.
And these first home buyers have their theories about why it's happening.
It seems like there's not much on the market and everyone's fighting, scrabbling over the little that is available, and maybe that's what's starting to drive the prices up. I know maybe 3 months ago I don't think this would have got what it got.
That view is endorsed by mortgage broker Bruce Carr.
The biggest driver in the market is the shortage of properties for sale.
Listings are down sharply in the big cities and the auction clearance rate is high. Property hunters have emerged after being scared off by the election and the opposition's proposals to wind back negative gearing and capital gains tax concessions.
I'd say the main driver would be the absence of that tax uncertainty and interest rate cuts.
Regulators have also eased lending restrictions imposed before the Royal Commission.
There's been a lot of pent-up demand, and now that we've got an increased ability for people to borrow, we've got lower interest rates, people are jumping back into the housing market.
Some reject the notion that banks are driving another boom.
Banks are being more vigilant in assessing borrowers' living expenses. They've had a lot of pressure from regulators in that area.
First home buyers, Jake and Catherine, both with full-time jobs and no kids, were disappointed with their lenders' support.
Yeah, unfortunately it wasn't what we wanted, but still enough for us to be able to work with.
When we look at borrowing in aggregate, credit growth in aggregate, the growth rates are still very weak rather than strong. So I don't think we're back into a situation where we should be concerned around rising debt levels. I think that's a little bit premature.
Sydney and Melbourne account for around 60% of the country's residential property market, and prices there have been rising by more than 1% a month. September's on track to deliver a similar result. It's unsustainable.
Most people are quite surprised by how rapid the rebound in values have been. And as well, I think as we head further into spring, the thought was that the increase in stock available for sale would slow down the market, but it clearly seems as if there's quite a lot of depth of demand in the market at the moment.
So Cameron Cusher says the banking regulator may be forced to tighten the screws on lenders yet again.
If we continue to see this kind of growth in the housing market, then we'll have more concerns around the high levels of household debt, deteriorating housing affordability. We might actually see APRA come back in with some other macro-prudential policies to try and tighten up that lending environment again.
So, congratulations!
Interest rates are set to go even lower and peak property season is upon us, both factors potentially driving prices higher. Those that dismiss the threat expect more sellers to emerge, helping to keep a lid on prices. They also say lenders are extremely limited in their ability to pass on lower rates and will soon not be able to ease lending restrictions in line with falling interest rates.
How much have we got to go in your estimation?
We're about 0.25% from the floor. Yeah.
But for now, at least, Jake and Catherine are forced to modify their dream.
I think we've sort of understood now with the market, you know, you could still live a little bit further out and it could just be one train station away.
All sold, congratulations, ma'am. $1,110,000.
That's what people are paying for 76 square metres of well-located dirt in Sydney.